definitely our view is not that we peak performance, but that we want to hold performance. How did we get there? First and foremost, very strong product substance, which helps us to leverage the pricing to where we got it to. If you look a bit more in depth into the numbers here today, you can see that the pricing lever was again very, very important and helped us to offset higher level material cost and inflation-related cost. So that's where we got to a margin level at cars of 14.8, and on the van side, above 15%. How do we want to take that moving forward? Definitely, we want to hold the pricing. What is key? Well, sounds a bit obvious, but not so trivial to do. It is really the substance of the products and make the products desirable. And that's what you can see if you look at vehicles such as the EQS SUV Maybach, which we revealed last week in China, or this week, the new E-Class, or GLC. These are really the products which are in high level demand. You could also see in the first quarter again that the level of demand for top-end vehicle stepped up significantly by 18%. That's exactly the strategy we're pursuing: pricing, top-end vehicle focus, and a high level of cost discipline. So you can take from there that, definitely we want to continue to hold these margin levels. If you look now in the track record, you can see 6 consecutive quarters where we're double-digit margin. And yeah, if you look in the guidance statement from today, we confirm the guidance, but at the same time, we say we see the performance rather at the top end of the guidance, which means for cars, 14%, which is, I think, pretty close to the actual performance of the first quarter. So we're not seeing this to be a one-timer or peaking. That is where we want to hold it moving forward.
You've clearly had quite an extensive set of thoughts in and around it, particularly in this EV market, and ensuring that you don't dilute things, but also that you remain kind of competitive. Many are perhaps looking at things like lowering prices to remain competitive in that market as well. Has that ever been a thought that you've looked at and considered?
We're looking at that obviously very closely. What's happening again? That happens in the entry segment of the market, at the lower and the mass segment, from which we definitely want to differentiate, and we don't want to enter into that pricing territory. As we could see more recently, the impact on the margins on the gross profit is significant. If you look in our numbers, we could hold the gross profit ratio at 26% in the first quarter, and that's definitely also something we want to do moving forward. As we transition into a BEV world, and if you enter into the high level of a pricing dynamics, which we see in the entry, that would be, I think, at risk. That's why we stay out of that zone. But there is a very important feature you need to command in order to allow to do so. It is to have the industrial flexibility to run the ship, also at the level of volumes that we're doing today, and to adjust, lower your fixed costs, at the same time lowering the break-even point. This is a requirement that you can run also with a more cautious supply of markets in terms of volume.